The red circle here is what U.S. sanctions hit the last time. The EU is when Europe stopped buying, and that yellow area is when we release the sanctions. What happens?
From now?
Yeah.
I think we're going to see what we've seen very recently, which is this is, in the short term, probably going to be viewed as positive for oil prices. But we're in a new zone. I think $65 to $75 a barrel, and I'm speaking WTI now. Mm-hmm. $65 to $75 a barrel, 80% of the time. Once you get above that 75, which in Brent would be 80, you'll get powerful self-correcting forces, I suspect. If we get back below 65, I also think excursions below 65 will be fairly short-term.
So the question, though, is what is Saudi Arabia going to do? And they obviously have a huge impact on what that range is going to be. And the question is spare capacity. I mean, there's such differing opinions as to what spare capacity actually is and what they can pump. What do you see it at?
Well, you've got the spare capacity in OPEC, and there's 1.5 million to 2 million barrels a day you could be pretty comfortable about, because that's out there. But in addition to that, you have the response, the supply response to these higher prices, which is coming in the U.S., in the Permian Basin, among others, restarting of the Bakken drilling and so on. So there's that sort of spare capacity. And to the degree, and we've already had a tweet from the president about how he feels about higher gas prices, he has the SPR to call on. So the market's right to believe there's plenty out there that can be called upon within a reasonably short time.
And the question is, how much would they have to do? I mean, I've seen ranges from marginal 150,000 barrels of oil a day lost from Iran, not getting to the million that we saw last time.
Yep.
What do you think it's going to be, and why would it be different?
Well, I don't think that's the only factor. I think the higher prices themselves are going to slow economic growth. If we get into an $80 Brent, to pick an example, or $75 WTI, there are other questions along with interest rates and the strong dollar that really leave you wondering just what is going to be global growth. We've had a real tailwind with global growth so far this year and late last year. Whether that can be sustained much beyond the next few quarters becomes an open question as well. So I think it's a manageable proposition, and I think those self-correcting forces are largely out there and will work their way as and if we have higher prices.